Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk about, once again, it appears that China and US are becoming best friends once again to sort out this trade war. As well as that, I want to talk about some recent data, which again is showing no impact of tariffs. And I want to ask the question, you good people, I want to ask you good people the question, is it a case of we're ignoring it, or the market's ignoring it, or is there something more deep rooted into it? But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, know the risks at hand before entering any trade. With it out the way, let's get started. So, indeed, we seem to have once again, a lot of happy talk, because the US and China plan to be friends once again to salvage their trade deal, to get back on the right path. Because several weeks ago, and there was much rejoicing in the market when this happened, it appeared that they had come to some sort of agreement. But over the last, say, week or so, that is sort of shattered. But after 20 hours of negotiations in London, the US Commerce Secretary Howard Lutnick said both sides have established a positive framework to build upon. This is what he had to say. He said, first, we had to get the sort of negativity out of the way, because there was a lot of negativity. He then went on to say, now we can go forward to try and do positive trade and growing trade. Now, the Chinese representative didn't wish to comment, but there is signs that both parties are very positive about moving forward and sorting this out. But there's more to it than just a trade war. There is a lot more to it. Now, first off, let's start off with some sort of hard facts on the matter, because China's exports to the US fell in May by the most since COVID. Now, you can understand that during COVID, they couldn't get their ships out because everybody, the whole world, was on lockdown. But exports to the US fell the most in May. Since then, there's no lockdown now. There's tariffs. But here's the thing. This is the thing. This is what I want to raise. I want to bring up. This whole trade issue, this whole trade war, trade negotiation collapse. 1 second, and trade negotiations are back on. We're friends again. We're not friends again. We're friends again. It's nothing to do with sales. It's not the loss of sales, which is the proving factor. It's the loss in trust between the world's two biggest economies, US and China, the world's two biggest economies. It is all about the failure or the loss of trust. Because at the end of the day, it comes down to two things. And that is chips and rare earth minerals. Now, when I say chips, of course, I don't mean the English expression of chips or the American expression of chips, which is, of course, crisps. And chips in England is, what Americans call French fries. I'm not talking about that. I'm talking about, obviously, computer chips. Now, don't forget, the Trump administration has put a ban on certain chips being provided by NVIDIA to China. And China needs these chips. They want these chips to progress with their technology. And the US needs China's rare earth minerals, A, for its military, and B, for its tech. So it's not about necessarily sorting out a trade war so we can all get back to normal. It's more of a case of negotiating on the two things both these countries desperately need. Now, the whole thing before we get out the bunting, this is why the market, we'll look at the market at the moment, is fairly muted on this announcement, is that both Trump and President Xi needs to sign off on this arrangement. They both need to have this phone call and have an agreement that they can proceed. However, like every excitable schoolboy, Trump couldn't contain himself. Now, before, like I say, they haven't agreed it, but he couldn't contain himself. This is what Trump had to say in caps on here, you know, when he posted on social truth. Very excited, obviously, this morning. He posted this: ball magnets and any necessary rare earths will be supplied up front by China. Likewise, we will provide China what was agreed to, including Chinese students using our colleges and universities. He also went on to say this: we are getting 55% tariffs. China is getting 10%. Relationship is excellent. So, in other words, the US will charge 55% tariffs on Chinese goods. In return, China will only charge 10% on US goods. Now, like I say, this is not yet a done deal. We've been here before. The market knows this. The market has been here before, where we've had much rejoicing that, yes, indeed, a US-China deal will come together. But like I say, both Trump and President Xi needs to sign off on this. We've heard nothing as of yet, any solid excitement or solid the fact that, yes, this deal is done from any Chinese representative as of yet, but it's not a real done deal. Because like I say, at the end of the day, this whole trade negotiations between US and China, US needs the rare earth minerals. China needs NVIDIA's computer chips. US does not want to give China these advanced computer chips, yet they need these rare earth minerals, like I mentioned. So it's all about that. So anyway, something else I want to move on before we look at the market as well, because we had some important data come out today. And again, I want to ask this question to you good people, and I want you to let me know what you think. But we are still not seeing any tariff impact because, and we should in many ways start to see it, because today's US Consumer Price Index eased again. Where prices should be going up because things are more expensive, inflation is easing. For example, CPI month on month came in at 0.1% versus 0.2% expected. Year on year, 2.4% versus 2.5%. But previous number was 2.3%. Core month on month, 0.3 versus 0.3. So 0.1 versus 0.3. And year on year core, don't forget that doesn't exclude oil or food, volatile things. Year on year, that came in 2.8% versus 2.9%. Now, just for a point of reference, year on year core last reading was 2.8, so it has not moved. So all this theory or worry that tariffs was going to impact prices and increase inflation doesn't seem to be occurring at the moment. Like I say, inflation is ticking near a 4-year low. Now, of course, this is going to put more and more pressure, obviously, on the Fed, because the whole reason why the Fed has been so not active in cutting interest rates is because they are worried about tariffs' impact on inflation. And we're not seeing the impact on inflation. Well, technically, we should be seeing that by now. Now, there is one thing I'm thinking of why we're not seeing this impact on inflation is maybe, just maybe, there are signs that the consumer, because consumer sentiment has been struggling, don't forget, but the consumer as well has not been actually spending their money as much or buying as many things as much. This is why inflation is not increasing to the levels or showing some impacts we would have thought it would be. Prime example, eggs. Now, eggs has been a very sore subject because obviously you all know, due to bird flu, egg prices in the United States skyrocketed. But they are down 11%. Now, before Trump, I know that Trump will claim that this was his doing. The reason why it's down is demand for eggs in the United States is down. Levels not usually seen this time of year. So it makes me think that reason why we're not seeing the impact is that the consumer is worried. And they're not spending their money. And when that happens, of course, obviously, it's a consumer-based economy in the United States. That will start being a problem. So that, again, is one of the, a food for thought. Again, it's open to you guys. Let me know what your thoughts are on this. Why are we not seeing the tariff effect? Or is it simply a case that we scared ourselves? We, put too much fear on this. And, at the end of the day, the bogeyman, the tariff bogeyman, wasn't really there. Or are we kidding ourselves once again? And it just hasn't kicked in yet. Or we're pretending and thinking it will go away. We're not seeing it yet. I know many times when that has been the case. When everything seems rosy and what you automatically think with numbers on paper, what your normal calculation should be telling you is not happening because something is holding it up and it's not become reality yet. Anyway, let's move on to what this impact the inflation as data has been, and of course, what the impact on the market has been, as well as a currency update as well. Right. Let's start off, first of all, with a currency update, because on the back of that cooler than inflation reading, there was indeed one big victim, and it's been a big victim over the last couple of trading sessions, and that is, of course, the US dollar. As the dollar has sunk, as we can see straight away, you see this candle here. This is when the CPI announcement came out. A lot lower than anticipated. The dollar came under a lot of pressure. As we can see, the euro now is currently trading at 1.1472. Now, we did say beginning of this month, the dollar looks set to potentially have its 5th month of losses against the majors, including the euro. So again, the dollar does indeed remain under pressure against the single currency. And like I say, we're approaching certainly, the high of April, around about 115. We're just below that level there. If we look at the British pound, At the same time, back above again, 135, again, trading around a 5-month high against the US dollar. It just very close to the 136. Don't forget, UK unemployment also came down as well. So the cable is looking pretty strong. If we look at the dollar index, okay, this is the candle here when the announcement came in, spiked down to 98.57, recovered slightly since then, but still trading under pressure at 98.74. We can see that with the dollar yen as well, currently trading at 144.88. So again, big spike down, big dollar weakness across the board. And we can also see that, of course, with my favorite, the asset I always talk about all the time, with gold. Gold back trading around $3,334. Now, before we move on to the other markets, there's something I want to talk about gold, because I always like talking about gold. As you can see, we're still in that level. We're sort of almost range bound over the last couple of trading sessions. Still below the high, or the key resistance level, in my opinion, which is around $3,450. Like I say, and it does look like that's been a bit of a double top, but way above that trend line there, representing that indeed, we are still currently in a potential uptrend with the yellow metal. But yes, okay, today it is indeed benefiting from dollar weakness. But as we'll go on and we'll talk about it in a moment, gold, with the slightly better optimism in the market, especially with this potential trade deal with China, shouldn't it be coming under a little bit more hostility now? Shouldn't its safe haven status be damaged a little bit by now? But it seems to be maintaining, because I do think gold is really interesting, is because a lot of the central banks are still buying gold reserves. And tomorrow, for this particular commodity, may be pretty interesting indeed, because tomorrow we have US Treasury auctions happening. So that is going to be quite interesting to watch. They are expecting maybe these Treasury auctions not to go so well. If so, the yellow metal could potentially benefit. So this will be a very interesting asset to watch. But anyway, moving on to the market as well, because the market's been open now for nearly an hour. S&P 500 is up slightly for the day, up 0.29%. What's really interesting, though, with the S&P 500 is, despite, again, this is why I'm asking the question, and I want you good people to let me know your opinions on this. Despite all the drama, the S&P is not that far away from touching an all-time high again, or its all-time high. I mean, its all-time high is around 6,144 points. We're currently trading at 6,056 points. Now, if you think of all the drama, all the uncertainty, the S&P 500 is now just a little bit close to that all-time high again, which again makes, let me ask you the question again. We've got no deals across the line yet. Okay, China and US said they want to be friends, but there's no deals yet. No concrete deals. So again, are we kidding ourselves? The same with the NASDAQ as well. Again, approaching again, once again, near its all-time high. And it's obviously been drawn or driven by the Mag 7. So let's have a quick look at the Mag 7. Let's start off with Tesla. Okay, open slightly higher today, currently up for the day 2.11%. This is interesting. There's two things on. We will talk more about this in other episodes later this week. But here's the thing with Tesla. First of all, Musk appears to be doing a little bit of groveling, saying that he regrets some of the posts he did during his divorce with Donald Trump, saying he shouldn't have went too far. So maybe he's looking to try and build bridges with the Trump administration. And the second thing is, and remember this date, and we'll talk more about this as we go on. 22nd of June is when we'll see Tesla's first robo-taxi. And there's a lot riding on that. A lot riding on robo-taxi for Tesla. So that's proven to be really interesting. So keep an eye on that, because everything else, Tesla's had a terrible year. And on paper, they're not looking healthy. But the robo-taxi could be a game changer. So keep an eye on that. The other Mag 7, Meta, again, up slightly for the day, 0.4%. Microsoft is up 0.83% for the day. Microsoft is very interesting to me, and I will probably do a special on Microsoft, because they just had a very, very good Xbox game lineup showcase thing a couple of days ago, where they announced their new handheld computer console thing. I am a gamer, but I'm very old. When I gamed, I was playing Mega Drive. So anyway, a long time ago, I don't game so much anymore. My son does, though. He loves it. Anyway, my point being is they did a new announcement on this handheld, which was not anything new. Everybody, the market was expecting it, but it was a very good showcase. But there's other moves. Excuse me. There's other moves that that Microsoft, with its Xbox brand, is doing, which I feel Microsoft could prove to be very interesting in the coming months, because they are doing moves. And like I said, I'll do a special and a bit more of a deeper dive on why I'm keeping a close eye on Microsoft. Amazon, okay, again, slightly down, negative currently as it stands, 0.12%, but nothing to be shocked about. Alphabet, up slightly, nothing to shout about. Nvidia, okay, up slightly, 0.39%. But again, this is another thing I would be watching, okay, in particular. And the reason why I say that, if this US-China trade deal can get over the line, don't forget, like I've said before, China wants chips. US wants rare earth minerals. Nvidia, if they can get this deal, Nvidia is going to be impacted, because if part of the deal allowing China have chips, Nvidia potentially could benefit. So again, we need to keep a very close eye on Nvidia. And finally, Apple, muted, just sideways at the moment. But again, like I say, with Apple, I'm interested and concerned about Apple, really. But that's another story. I'll probably go into a bit more about that. Anywho, still got stuff to come this week. Still got data to come out, of course. We still have, obviously, US PPI, Producer Price Index. Again, an inflation indicator. Will that show us an impact of tariffs? And German CPI, and again, US consumer sentiment. It was better the last reading, because, consumer sentiment has been low, but it was better the last reading. Will we see an improved reading again, once again? Don't forget, you can ask me questions anytime you wish, or ideally share with me your opinions. Let me know what you think, your ideas. So, and as well as that, if you're watching me on YouTube and you like this type of thing, subscribe if you like, hit the notification button so you know next time we're going live. And if you like this type of content, by all means, give me one of those. It's nice to know that you like what we do. As well as that, if you stumbled upon this video and you're not part of the OneRoyal family and you want to know more about us, by all means, go into the description below, click the link above it, and you can find out a bit more about who we are and what we excel at. The other thing I want to make a point being as well is a lot of people I notice go back, watch the recordings, obviously, on YouTube. They miss the lives, which is fine, but they go back and watch the recordings. If you are watching this as a recording and you have a question, by all means, put it in the comment section below. I will see it and I will answer it next time I'll go live, which of course is tomorrow, because I go live practically every single day. Okie dokie. If there is no questions, not a problem. Not a problem. Leaves me to say, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your research, do your due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.